We have Kirk Hartman, Chief Investment Officer at Wells Capital Management, and Kirk helps oversee about $360 billion in assets under management. He joins us from our Los Angeles bureau. Kirk, let's talk about the sell-off that we saw in commodities and stocks. Why do you think this is a buying opportunity here?
Well, I think it's a buying opportunity because fundamentally economic growth is still pretty strong. In the U.S., we're expecting GDP at about 2.5%. Growth in China is still going to be at 5 to 7%. Obviously, that's off of a 10% figure. But around the world, you saw the ISM manufacturing survey. I think the economy actually continues to be pretty strong.
Yeah, but it seems that investors are not pricing, I guess, in the economic data these days. In fact, there's a lot of jitters, volatility on the markets. I mean, how long do you think we'll see the selling last for?
I think you're going to see a lot of volatility this summer. My expectation would be the fall would get much better when the earnings overcomes the fear. But clearly, there's a lot of fear in the market right now, a lot of uncertainty in the Middle East, a lot of uncertainty in the Korea Peninsula. So a lot of reason to be negative. But again, I think the earnings effect will overwhelm the geopolitical issues.
Okay, and that'll turn around sometime in the fall. If you think we have a lot of volatility going into the summer months, what's going to change everything when, I guess, September rolls around?
Well, I think everyone will return from vacations. And again, I think the earnings for things like the S&P 500 index are pretty strong. And my view would be I would go right back to the stocks that had their run. You know, the S&P was up 10% not too long ago. Now it's down about 3%. But there was a reason investors bought those stocks. So I would go right back to those stocks that had the run before.
Yeah, and that includes technology names. In fact, I think your portfolio is weighted towards technology, and you like the big caps in this sector.
Yes, I'm very positive on technology. And I think what's interesting in terms of our holdings across the board, 8 of our top 10 holdings across the organization are technology stocks. That's a very fundamental shift from a couple of years ago when 8 of our top 10 holdings were financial stocks. It's interesting as technology companies have great balance sheets. They have a lot of cash. And again, I think you will see a lot of the very big, strong technology companies test their new highs again in the fall.
Okay, now what I find interesting is that you actually see China ADRs coming off 20%, a possible buying opportunity on Chinese equities. You know, we had some disappointing manufacturing figures yesterday, though, Kirk, and some are suggesting that this shows and indicates that the Chinese economy is slowing down dramatically.
Well, I think it's slowing down. I think a lot of that is a of government action. I think the government of China has done a great job slowing the economy, and I actually look at it as a positive more than a negative. I would have been worried if China had continued to run because I would have thought in terms of property markets and commodity markets, you would have had a bubble. So I look at a 20% downturn in commodities or in Chinese stocks as actually a good buying opportunity.
Okay, what would you buy in China here? I mean, they don't have many technology firms, so what sort of sectors are you looking at?
Well, for instance, and we probably own this stock, I'm very big on the Build Your Own Dream, 1211 HK, which is the Chinese automobile manufacturer that's relocated their U.S. headquarters or going to Los Angeles and build hybrid cars. You know, I think that's a great opportunity. So, without getting into any more specifics about China, I think there are a lot of good opportunities.
All right, Kirk, nice talking to you. Thanks for that. Kirk Hartman, Chief Investment Officer at Wells Capital, joining us there from Los Angeles.